Hey guys, Kill Stokes here. Welcome back to another Trading Edge video. Hope you guys are having a great weekend. Mine is off to a good start. My kids got a soccer tournament this week and they've won the first two games. So one more tomorrow morning and they get to make it to the championship for the first time, which would be pretty cool. And hope you guys are enjoying the fact that you got another Trading Edge video. If you guys are new, this is a video I do each and every weekend showing you the top trading ideas that are on my radar for the week ahead. So if you're brand new, make sure you subscribe. That way you don't miss this video and the other sneaky videos that I unleash throughout the week, like the one I did about a trading book that is awesome but never really discussed. So we're going to start off today by discussing the pound Aussie. I'm here on the daily chart and we've got a potential short opportunity that I'm interested in, right? You can see that this pound Aussie has been in consolidation since, pretty much a year ago. Last summer is where we started. And we just broke a few crucial levels, right? Recently, we broke and closed below this level right here. And even more recently, at the end of this week, right after a wacky week of Bank of England stuff, we had another lower low, lower close. And if you guys are new to my channel, if you're new to Tier 1 trading and our philosophy on trading, we are rules-based discretionary traders, right? So discretionary trading means like, you have the freedom to do what you want. So some people take it to the extreme where they stick their hand out the window and they're like, oh, a little drizzle. Must be a bearish day, right? We're not like that. Not that I judge people who are like that, but we believe that trading is an art and a science. And we believe in understanding the importance, I guess, of being able to read a market, interpret a market, and make decisions on where you think price is going to go and what do you think price is going to do. With that being said, we don't have full freedom, right? We do have rules that we need to establish to ensure that we're consistent in our trading. And in trading, right, consistent analysis plus consistent execution equals consistent results. And that's exactly what we're after as we're treating trading like a business. So one of those rules that I do follow is how I interpret breaks and violations of structure. If we violate a level of structure, and violation means a lower low, lower close in this case, then I predict that price is likely to go lower. So that is my directional bias no matter what. You show me 100 charts, it will always be the same. Back to the discretionary side, where price action is likely to go, well, I'm allowed for some interpretation of that based on levels that I value. So a few levels that I value here are going to be this, right? The main level that I value is going to be our next level of structure down here, this consolidation period to start the year, I guess end last year and start this year. You can see it's a nice wide zone here. We also have a few other things lining up in that zone. If I take my Fibonacci extension tool and drag it from this most recent swing high to our swing low right here, right? This is the swing on the 4 hour. It's hard to see right here, but you got to trust me on this. We'll go down to a 4 hour later. But swing high to swing low and back up, you'll see that there's a 1618 Fibonacci extension in there, which is the golden mean. And then if I take a 1-to-1 measured move, again, trust me when I say this looks better on the 4 hour, we're going to have an equal measured move down in that level as well. Now, what I also want to do is this. I want to throw some volume on my chart because volume is a pretty key tool and good indicator of where price is likely to go. And what we'll see is this. We'll see that we are currently in something that I like to call the void. Sorry, working on my voice acting career. Still getting there. Give me time. It takes time, right? But basically, we have a heavy spike of volume right here. And then the volume kind of goes away before spiking at this level again. And for me, volume is synonymous with interest. And interest levels are levels that the market is typically pulled towards or pushed from. That is support and resistance, supply and demand. So we're getting another clue that this level is a good one. Now, here's a conservative level if you want, and this isn't as important for me, but it is somewhat important. If I draw a line right here, this is going to be right above, right at the 188 even handle. This level is somewhat important because this represents kind of the lowest point of our inside levels of structure. As price came down and hit support, 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 and support, you can see that this is pretty much the extreme of that level. So if you're someone that has the opportunity and maybe you want a little bit more cautious approach, that 188 is a good level as well. So going down to the 4 hour, just to kind of give you some ideas on where you can expect price to go. As long as price doesn't violate this white line right here, we are good for shorts, GFS, right? If you want maybe a lower level to isolate, perhaps on a lower time frame, I'd pay attention to this zone right here, as this was the last level of rejection, to see if price can get a little reversal down here before we continue to the downside. So awesome looking opportunity here on pound Aussie for shorts. Let's move on to the next pair. Next up is going to be the Euro Canada. We're going to follow up on our structure-based theme. You can see Euro Canada has put in a pretty solid level of resistance, right? You can see the highs here have been hit a few times. Started off again late last year, and then we kind of retraced off of that. Looked like we were going to extend to the downside, and came back up earlier this year and kind of played around there and never really made it. If you follow the trading edge religiously, you're going to remember that we looked at this a few weeks ago in the form of a potential head and shoulders, and really nothing has changed about this setup. And here's the thing I tell our traders at Tier 1, right? We do this in the Foundation 2 course, where it's so easy to get caught up over names, head and shoulders, and flags, and pennants, and double tops, and double bottoms, and they do carry importance with them, but what's important is you understand what makes that specific pattern important. And I say this because of this, right? We can debate whether this is a head and shoulders or not, right? I can look at this and be like, hey guys, look, head and shoulders. We have our left shoulder, our neckline, our head, and then another shoulder down here. Where someone else may be like, well, Akil, it's not a head and shoulders because we only hit once over here, and then here we come up, we retest, hit again, and we can get into this big debate about whether it's valid or not. And I'm here to tell you this. It doesn't matter, right? In the Rock's voice. If I had a better trading week last week, I would have paid the Rock some money to do a cameo in the video and simply to say that. Millions of dollars for the three-word phrase. But I don't. I didn't have a great trading week. Well, I did have a great trading week last week. 2 weeks ago, I didn't have a great trading week. This week was actually pretty good. Good job, Akil. 2 weeks ago was pretty rough. Anyway, I digress. The point is, whether we see this as a head and shoulders or not, what matters is that we violate this white line. This level of structure is violated, right? And this goes with what I told you guys earlier about the simple rules. If we violate that level to the upside, then I predict price to continue up. If we're going to continue up, here are two levels that you can pay attention to, a conservative level being the first one, and then a more, aggressive level being the second one. But 149 is if I wanted to pinpoint a mark here, 149 is the level that I like here. And with our current level of structure being at 148, it's a good 100 potential pips to the upside, and it looks a lot better once you go down to a lower time frame, trust me. Next up is silver. This is going to be a follow through from one of our live room ideas. You can see the long that we called. Oh, magnificent, right? But what we also did is we kind of reverse engineered this, right? As we were looking for longs here, we asked ourselves, okay, so if I'm a long trader, a buyer, and I'm looking to take profit, I want to take profit where the next wave of sellers are interested, right? So I call this technique think like the other trader, where, I want to put myself in the shoes of the other trader, in this case, the short traders, because where they want to get in is where I want to get out, and that's how the balance of life in the market works. And what we did was a few things. We had a nice 1618, 618 level up here a little bit, but in that analysis, we also discovered a cipher, right? So now that the long opportunity is over, the cipher pattern still exists, and you can see that the cipher pattern exists from our 786, which is right here, the start of this green box, all the way to our X leg. And if you're someone that's looking for perhaps a more conservative reason for entry, you're not entering aggressively at the 786, what we had was a nice engulfing candle, a lower low, lower close candle right here. So price is pretty much back where we started. Maybe it's a little bit less than the initial cost, but depending on how the market opens this week, we may see another opportunity to get involved in this cipher if you didn't do so already. So just want to bring it back up to your attention, since we spent a lot of time talking about the long trade, and now it's time for the short trade. Following up on our pattern theme, we're going to head over to the NASDAQ, where we have a Gartley pattern setting up. It's actually completed already, but still within that zone. The Gartley is going to look like this. X to A, swing high to swing low. That's the wrong tool. Repeat, X to A, swing high to swing low. A to B, our first retracement right here. B to C, our second retracement, and our decompletion right at that 786. Starting there as a minimum and going all the way to the top of the X leg as a maximum. So at market, bear, Gartley here on the NASDAQ. And of course, we're in that zone. So if you're someone looking for a more conservative reason for entry, pay attention to how price reacts in this zone to start the week. That's it. Hope you guys enjoyed. Hit that like button before you leave. Leave any comments if you have any comments or questions or just topics you want me to cover. I do both the Trading Coach podcast and the Trader Coffee Break. So a lot of it is the comments and questions that you guys give me throughout the week. We turn them into content. That way it can help you and a lot of other traders out there. So subscribe to the channel. That way you don't miss any of those things. And until next time, plan your trade your plan. Good job, Everton. Surviving, not getting relegated. A weight has been lifted.